I want to make sure that people understand narratives drive the market and people underreact to them.
The S&P 500 was down just the first quarter, a little over 4%. And in your index, here it is, up a little over 7%. And I'm thinking to myself, like, how are you able to do that?
We have military escalation in the Middle East. We have trade war happening. We have immigration. We have a healthcare issue. These are not tradable securities. These are these narratives, okay? It's stories. And I think that's what the market responds to. So here's what we do.
It seems common sense, right?
You have a busy schedule, but sometimes you go out, right? Do you guys really talk about, oh, this small cap firm is fantastic, you should invest in this? You don't talk about, oh, this is a great bond, you should really go into that. No, what you talk about is, wow, this military escalation in the Middle East, what do you think is happening? Oh, these, tariffs, what do you think is going to happen? That's what you talk about. And what this index or this portfolio does is really track this.
What are some of the media narratives that are bubbling up right now for people to be looking at?
We're not trying to have the media tell us what's right. Even if there's false information, if it moves the market, I want to know about it.
You can almost rate journals and news outlets of accuracy.
Yes, we could. We haven't done it.
And what do you think for advisors right now? What headlines or news cycles should they be looking at?
The strategy was loading on was narratives of, let's say, risk and uncertainty, international conflicts, commodity investing. These are kind of the top three.
What's something you have learned from teaching?
It's a great question. Look, with these
systems work, people fail. Welcome to InsureMark's Advisor Mentorship Podcast with Vice President Jeremy Hauser.
Welcome back to this week's episode of the Advisor Mentorship Podcast. I'm your host, Jeremy Hauser, and wow, what a first quarter when it comes to the volatile market that we're in. A lot of things going on in our country, across the world. There's a lot of things that hard to predict. And so forth. Today, we have a guest on where this is going to be unique. This is a very, I would say, based off some of the research and some of the academia we've had on the show, this is going to be a new spin for the audience. And honestly, it's something over the last decade that's starting to catch some trends. So today's guest we have is Professor Ronnie Sadka. A little bit about Ronnie real quick, and then I'll bring him in onto the show to talk a little bit about his background. But he is actually the founder and managing partner of MKT MediaStats, where he oversees research and business strategy. He's a prominent researcher in asset pricing and market liquidity. Sadka's work has been widely published in top journals such as the Journal of Finance and Journal of Financial Economics, and featured in major media outlets, including the Wall Street Journal and CNBC. So his recent research emphasizes big data and narrative-driven investment strategies. Ronnie is also currently an active Hobb family professor at the Boston College Carroll School of Management. So how are we doing today, Ronnie?
Doing great. Thanks.
I'm looking forward to today's show because I think one thing that we continue to have is a lot of financial advisors. Customers are always concerned. There's always so many things that are going on out there. And we're going to dive into a lot of things around not just the market, a little bit about what your team does, but most importantly, so gave a quick blurb of who Ronnie is, although you're a lot more than that. So why don't you tell the audience in your own words? So who's Ronnie Sadka? And also, what brought you actually to Boston College, by the way?
Yeah, great question. First of all, it's a pleasure being here. Thanks for having me on the show. I'm very excited because I want to share with your audience things that I think are very important in financial markets. And I think it's something that hasn't been addressed over the last, several decades. And I think we're making a step towards, using innovation and technology to help people invest in a way that I think makes sense. So I'll talk about that. But, a little bit about myself. My background is more engineering. I did a PhD in finance and spent a little bit of time on the street. I always had a foot in the street, but I've primarily been an academic. I spent a few years in the University of Washington after graduating from the Carroll School of Management Northwestern, and then I spent some time at NYU and the University of Chicago. And then around the crisis period of the financial crisis of 08, Boston College gave me a call and said, "Hey, do you want to join us as a tenured faculty?" How could I say no? So I moved to Boston 17, almost 18 years ago, and and went through the ranks here, and it's been a fantastic experience.
So, I mean, that's pretty cool though. So, and it seems like, so you were an engineer, but I mean, your whole world went into teaching. I mean, what got you interested in doing that as a career choice?
Yeah. So in my engineering, it's more I did industrial engineering, which is a kind of fancy way of saying kind of optimization. So I did a master's in optimization in operation research, and then I wanted to apply that something more tangible. So I came to the world of finance, and then I had some experience on the street, and I really fell in love with this whole idea of kind of empirical asset pricing, really understanding, kind of work with the data, understanding what's happening in the markets. I always find it fascinating. And so I kind of use these quantitative tools that I've acquired over the years and apply them to financial market. I think the important thing is to remember that in the financial market is not just math. I mean, you need to have some good economic, like sound understanding of what the economic drivers are, but you can then use quantitative tools to do it at scale. So that's really what we're trying to do.
And hearing you speak a couple times now, I take myself back to college, and I mean, I'm trying to like think of the professors I may have gone through at school. It's like, I mean, it's probably pretty beneficial. I would say it's very beneficial for your students to be hearing really how you have a spin on the world. I think one of the former guests that we just had on the show, we talked a lot about like visualizing manifestation and basically being able to raise your standards of who you are. And one of the interesting things our guests talked about was in order to really start to raise your bar is the third and most important part is being able to teach others what you know. And it almost like self-reflects and gives you a better, I would say, advantage point of knowing your craft better. Is that the way you view it too? Being able to teach?
I mean, absolutely. I think only when you start teaching, then you understand the material. So it takes time because you really need to up the level, as you say, to really fundamentally explain people different ideas. So I certainly remember, I thought I went through grad school and I thought I knew everything, and then what I learned, and then only when I started teaching it after a few years, you really get it. So I think it certainly forces you to know the material. But I think there's something also very important, the way, at least the way we think about BC, student formation, all that. I think the professor is there also to show an example, like how you want to teach people how to learn. You want to teach them critical thinking. You want to teach them, ask questions. It's more about the questions you ask, not about the answers. The people, like the innovators, are those who understand and they know how to identify the right, question or need. And then, smart people can answer them. But I think the true scholarship is really understanding like what's the right question.
Mm-hmm.
So we try to do that in class. And I think, if you're doing something like teaching investments, which is what I do, you have to be really tied with financial markets. So you want students to understand what's going on. You want them to be curious. You want to explain them, well, if there's something you don't know, here's how you go about and learn about it. And then, of course, I share the innovation that I bring on the street. I shared with the students. And so you're always keeping a connection with both kind of the young bloodline that is coming in and young blood and the practicality of the street. So it's been great. I mean, recently I can share, some of the things we do outside of the program that we're going to talk about, but is using social media to understand investment. And so we actually have a relationship with Reddit, and we're able to process the data. And it's kind of interesting that when you think about using social media to understand the signals about financial markets, it's not really natural language processing. It's not text. People don't communicate like that. They communicate with emojis. So what we do is we count the number of YOLOs and the rockets and all that. And so, my kids had to explain that to me a little bit. And then I kind of brought it to the classroom, and you can see how people react to it. So with this young generation, clearly, this kind of a connection with and communication with social networks I think is a new force, and certainly retail investors are a force in the market. And I think there's a lot of things you can use social media to better understand, even just the fundamental economic variables that for a long time we looked at the government agencies like the BLS and others and Fed to just understand what's the state of the economy. But if I really want to understand, let's say, the labor market, I'm going to do is I can go to Reddit and ask, well, how many people are saying, oh, I just lost my job and it's hard for me to find one. And if I want to understand consumption, I'm going to go and check how many posts were there. Oh, I just bought this. I want to buy that. And I can see trends like that. And I can tell you when we aggregate it over the 21 million users, and any very day and week and month, you can really see trends before they are officially announced in the official channels. So anyway, so that's just telling you that, we're all growing, but we have to kind of grow together. And I think in the classroom, it's really important to keep that connection with students in the street.
North American has redesigned their award-winning Secure Horizon suite of FIAs to be more resilient in volatile markets. And effective March 10th, they added the S&P 500 Distance Stabilizer Index. This measures volatility over multiple recent time periods, which allows for flexibility to navigate short-term spikes and increase exposure during subsequent market rebounds. It aims to track the pure S&P 500 without a fixed volatility target, bonds, or commodities. It's available on the 1-year, the 2-year, and also their very popular laddering strategy. They have also recently added the straight S&P 500 annual point-to-point cap strategy to this suite of products. Not that commissions are important, but North American is also running a 1% commission on all of the Secure Horizon FIAs effective March 1st. When is the end date of this special, you may be asking? Well, at this point, there is no end date. So take advantage of this opportunity now. For more information on the North American suite of products, feel free to go to www.insuremarkamp.com/jhauser and click on Learn More. I just got to where you're going with the concept of that is so true. So the fact that you are basically boots on the ground and interacting with the younger generations, and it's really pushing yourself, I would say, as a teacher to not only be able to communicate better, but continue to learn. So what's probably one of the, what would you say just off the top of your head? What's, as a teacher, what's something you have learned from teaching?
Look, I think you learn to communicate. I think that's very important. I think you learn to interact with students.
Mm-hmm.
You learn to be more patient in the way you interact. Not everyone is going to, you have a question. Not everyone is going to raise their hand and answer. And sometimes there's that kind of battle between who's going to break first. Is it going to be the faculty or the student? A lot of faculty just ask a question. No one answers. There's this kind of awkward silence. And then the question is who breaks first. So I learned that I shouldn't break first, even if it takes a full 30 seconds of silence. I'm not going to break. So things like that. But I think it's really cool that you always have some audience that you can explain things to. And if you're able to explain it to them and you pass them, then it's much easier for you to go and speak them outside. So I think it's kind of a sounding board. For new ideas. And yeah, it's been great. It's very rewarding when kids come to you after not just the next semester, but after a year, when they graduate and years after, and they tell you, hey, here's what I'm doing, and the true evaluation of a faculty is not these teaching evaluations they do right after class and they took the exam. The true evaluation is whether they remember what you said 5 years, 10 years later.
Absolutely. The power of pause and then, basically letting the seed grow, watching that tree grow. I think, so especially for the audience today, a lot of financial advisors that are listening. So the fact that your students that are in their 20s or however old they are able to literally get financial markets insight from you is pretty incredible. So advisors, they look at academia as well too, to try to figure out, where's the puck going. So let's just look back real quick. Just obviously over the last several years, we've had a pretty good run with just the S&P 500. We started off the first quarter pretty rocky. It's about a flat market, I would say, if you just look here domestically. And for those that don't know, so I talked about it at the very top of the show, MKT MediaStats. Your team actually designed and was able to package a index based off of your research. And so going and prepping for this show, I noticed the first quarter, when you're just looking side by side, the S&P 500 was down just the first quarter, a little over 4%. And then your index, here it is, up a little over 7. And I'm thinking to myself, like, okay, that's interesting. So why is that? So how are you able to do that?
Yeah, I mean, look, a couple of things. I mean, the just before the S&P is a long only index, and our index is long short. So we shouldn't have a lot of correlation with the market anyway. I think the good comparison is not only the S&P, but it's also other funds out there, which the first quarter hasn't really been great. But I do think that I want to talk about the fundamentals of the principles of what we're doing in this program, in this index. So this really goes to, how we think the market functions. And in the financial industry for the last 20 or 30 years, okay, several decades, more than that if you count, others before. But the way people are thinking about investments is they look at some characteristics of companies. Let's say they look at, their earnings growth, and they look at, let's say, what's their book to market ratio. If you want to think about value versus growth, they're looking at price momentum. Has the firm, increased price over time? Is it gathering momentum? These are all, or kind of what is the quality of the firm? All of these kind of measures that are really coming from either market price, volume, volatility, things like trading volume, volatility, or financial numbers. So that's really most of the strategies that you hear about are based on these ideas. And the way we think the market works, and we're not the first ones to talk about this. Actually, Bob Shiller, the Nobel laureate, came up with this term of narrative economics. And in his view, the market is driven by narratives. And I think that really mirrors what we think. And when you're in the financial market, and let's say you're a trader or a fund manager, you're constantly talking to other people about what's happening in the market. And so there's these narratives that are floating around. And these narratives are really what I think impacts people's beliefs and thoughts, and then eventually leads up to trading activity. So in other words, I think the way the market works is we have military escalation in the Middle East. We have trade war happening. We have immigration. We have a healthcare issue. These are not tradable securities. These are these narratives, okay? It's stories. And I think that's what the market responds to. But there is a disconnect between here's their narratives and the assets available for people to trade. There's that disconnect. And what we're trying to do is to make that connection.
New product alert. Revel One Financial is continuing to rev it up. At Revel One Financial, their mission is to revolutionize how people feel, think, and experience retirement solutions. They are bringing unmatched agility, speed, and innovation to the fixed annuity industry. And now Revel One Financial just announced their latest product launch, introducing Accum Rev Fixed Index Annuity with a 10% 7-year guaranteed cap rate with the S&P 500 1-year point-to-point index interest rate on the 7-year product. Rate subject to change at any time, but you heard that right. 10% cap on the S&P 500 guaranteed for the 7-year contract. Accum Rev also has an index lock rider with 3 ways to lock in performance. Another launch, another leap forward. That's the Revel One Financial Cheetah Spirit, built for speed, designed to deliver.
To do that, you first need to quantify what a narrative is. So when I say trade war, okay, well, it kind of sounds like an elusive thing, but how can I actually go and quantify it? So our solution is really trying to quantify what the narratives are in any given point. And then on top of that, I can talk to you about research and then how that translates to the performance we see. But let me start with just telling you the idea of how do we quantify a narrative? How do we know that trade war. What is it? Can I quantify? So here's what we do. Here's the solution. Here's the technological innovation, if you will. We go and we scrape. We create almost a copy of the internet, if you will, on every single day. Point in time.
Mm-hmm.
It's about 1 million articles every single day. That's the order of magnitude we're talking about. Okay? Digital media sources, all public information.
Is that just US or that's?
It's global.
Okay.
A lot of it is US. Okay? It's English speaking, but that's okay. We checked it and we have significant coverage around the world because it doesn't matter where. They have the domestic, local language, but they also have, an English website. So we really found that it didn't really matter. Of course, there are going to be nuances in translation, but we're focused on English speaking, but we have good coverage everywhere. Asia, Africa, of course, Europe and the US, but with South America, predominantly the sources come from the US, but we have a good coverage everywhere. And then what we do is we look at each article. And now there's a lot of methods you can do it. But when we started more than 15 years ago, we created our own natural language processing. So we try to understand whether it's keywords. Now today we kind of use LLMs, but you can understand what are the topics that the article is talking about. So what we do is, let's say you talk about trade war. You can see if an article talks about the trade war. You have 1 million articles. You can see each one of them, is it talking about trade war? And so what happens is you can calculate on every single day, you can calculate the percent of articles that talk about a given topic. Whether it's trade war, so words related to trade wars, or military escalation, or whatever it is, okay, social unrest, doesn't matter. We can calculate and look at the percent of articles that talk about it. And then we can track it over time. So if you're going to look at, the pandemic, you're going to see, rise in 2020 and then kind of slowly, declining over the next year or two. If you look at, trade war after April 2025, boom, you see an increase in discussion of trade war, and then kind of more volatile, and then, the past year, etc. So you can see that military escalation again shoots up February 2022 with the Russia-Ukraine military escalation. So you can see how people are talking about, or to what extent they pay attention to each narrative. Does that make sense?
Yeah.
So we're moving from an elusive kind of idea, intangible narrative, to a quantified narrative. It's a score, it's a percent. And we can track that over time. Once we have a time series, there are a lot of things we can do with it. So first is quantifying people's attention to narratives.
Yep.
Then I can move from the narrative to the asset. How? I can calculate the exposure of an asset to a narrative. Pick a stock, or a commodity, or a currency, or a sector. It doesn't matter. We look at all of them because the index is multi-asset. But you pick a stock. You can just see. We calculate using regressions, but it's really looking at, you can look at the correlation, weekly correlation between a stock's return and the changes in the narrative discussion. So you can see which stocks are positively sensitive to a narrative and which ones are negatively sensitive to a narrative. In other words, you can see which assets go up in value when there's more discussion on trade war, and which assets go down in value when there's more discussion on trade war. So what you can do is you can start understanding for each asset, what's their sensitivity to different narratives. So what we talked about so far is how to quantify narrative, and then how to understand an asset's exposure to a given narrative.
As a financial professional, balancing income needs today with planning for tomorrow is not easy. That's where Talcott Financial Group comes in. New name, proven strength, built on decades of experience and backed by over $126 billion with a B of assets. With Everguard Assurance 10, you can deliver competitive guaranteed income through Early Path for income now or Future Path for income later. Stronger income, clear choices. Talcott Financial Group is built for what's next. See talcott.com/resources for more information. That's Talcott, TALCOTT.com/resources.
The third component is how can we predict performance? Here's where behavioral finance comes in, okay? So what we find in our research that typically investors tend to underreact to narratives that are bubbling. So people talk about a narrative and people talk and people continue to talk about it. And what we track, we look at the discussion systematically. And what we see is when people have been talking about a narrative, let's say increasing in discussion of the past 6 months versus the prior 6 months, we call this like a narrative momentum. The narrative discussion of the narrative is gaining momentum. And what we find is that assets that are sensitive to trending narratives tend to outperform in the future. So what that means is when there's discussion of different narratives, the narratives that exhibit a significant increase in discussion over time, over the last year, the assets that are sensitive to that tend to go up. Now, my interpretation is when there's these narratives that are kind of bubbling up, they kind of they're going up. It's kind of under the radar. People don't price it yet. Example, AI discussion back 3 years ago. People were talking about it. It didn't come into earnings or prices about a year after ChatGPT came out.
Mm-hmm.
Inflation. People were talking about inflation right after, the pandemic. People were talking about, well, here we're printing all this money, blah, blah. And, we're going to see inflation. People were talking about it, but it took about a year for it to happen.
True.
Even military escalation right now. People have been talking about it. The administration certainly has been talking about it for several months before the actual, implementation happened. So you see these kind of discussions that are happening, but the market doesn't respond yet. Now, conversely, when there's an explosive narrative that everyone talks about very quickly, okay, let's say like a meme stock event, right? That gets priced very quickly and there's a reversal. So what I'm talking about are narratives that are kind of bubbling in the background and people don't pay attention to them because people have limited attention. And so we can build a portfolio that systematically tracks narratives that are kind of bubbling, been going up, and immediately trades the assets that are sensitive to that. And we rebalance that every single month. One last component to this is what are the narratives that we're tracking? So to make this systematic and to feel comfortable that you look in terms of backtest over the last 10, 15 years, what we've done is we track narratives. We have a list of about 55 narratives, and we call them evergreen narratives. These are narratives that, if you look at the last 40 years, they kind of come in and out.
Mm-hmm.
For example, recession, inflation, liquidity, public health, military escalation, trade tensions, all sorts of social unrest, different strategies like momentum investing, value investing, carry, currency, all of these, or commodities. So these are all kind of narratives that go in and out. So that's what we call them evergreen. Okay, this is a list that was kind of predetermined several decades ago. And the way we looked at it is we actually look at, in academia, if you want to publish a paper, you have to send it to an editor, to a journal. The editor looks at it, and you have to tell the editor which subject are you talking about. Is it like a macro thing, or is it specific to investing? And so there's these different categories that journals have developed many years ago, economic journals, to classify different articles into different kind of topics. And so we use those because these are evergreen. They've been for so long. So we're not kind of adding new things all the time. This is a set, but it's so comprehensive that it captures really a lot of the macroeconomic narratives that are out there. And so our system systematically, of the 55, it sees what are the narratives that are kind of more trending up, which ones are trending down. It automatically assigns the assets to those narratives that are going up. And we're doing it across many, many asset classes, whether it's single name equity or sectors or currencies or, commodities. We have a sleeve for each one. And then together, aggregating it, we get this nice portfolio that you mentioned. And the last thing is, it is long short. So some assets, when there's trade war, some assets stand to benefit, some assets stand to lose. And so we go long short for each one of them. So in that sense, we're relatively neutral to overall market movements. We're really trying to understand relative performance of different assets to the narratives that are driving the market.
How often does it rebalance?
Every month.
Every month.
Yeah. It's not 100% rebalance every month.
Yeah.
But we refresh the information every month because we look at slow moving narratives, right? So from month to month, you're not going to see a lot of change, but we always want to keep the up to date, data and refreshed.
A lot to digest there.
Let's pause. I want to make sure that people understand. There's a few elements here. But again, we built everything systematically so that everything we said and the economic ideas are just translated systematically to implementation of a portfolio. But the ideas, I think, make sense. The idea is what I want to make sure people understand.
1,000%.
Narratives drive the market and people underreact to them.
Yeah, I guess you got to be in the right mindset, but it seems common sense, right? I mean, it really feels like this is common sense.
Let me ask you this. When you, let's say, I'm sure sometimes you have a busy schedule, but sometimes you go out, right?
Sure. Yes.
With friends,
yeah.
Family, Do you guys really talk about, this small cap firm is fantastic, you should invest in this?
Exactly.
No, you don't talk about, this is a great bond, you should really go into that. No, what you talk about is, wow, this military escalation in the Middle East, what do you think is happening? These, tariffs, what do you think is going to happen? That's what you talk about.
Yeah.
And what this index or this portfolio does is really track these fundamental stories, economic drivers of the marketplace. Like you and I, what we talk about with friends, this is what we talk about. Of course, we talk about kids and other stuff, of course, but this is the topic of the day. And what this program does is tracks these discussions and creates a portfolio that we think that the assets have not been priced yet fully. That there's these bubbling, topics that are happening. And at some point, the market is really going to talk about it a lot. And then we're going to see this performance.
Big news from IBEXIS. California is officially live. The IBEXIS fixed index annuities, the FIA Plus, Wealth Defender, and Wealth Defender Bonus are now approved and available in California, opening the door to one of the largest retirement markets in our country. Advisors can now bring IBEXIS solutions to California clients and competitive strategies designed to help win new business. And as an added benefit, IBEXIS now supports both full and partial Roth IRA conversions, giving you additional tax planning flexibility for your clients. To learn more, visit ibexis.com, no login required, or contact the IBEXIS sales desk at 888-717-1003. Contact them today. And the reason why I was very excited to chat with you, because it's like where the world's going. The world's already there, but where the world's really going, especially with the younger generation. And you mentioned at the beginning, talking a little bit about social media and emojis and certain things, and that generates the topic of conversation within groups of people, but how fast information can be shared, and the fact that the amount of time people spend on their phone nowadays just means that your percentages amongst your articles, narratives can be shifted quicker, but also longer, because then it's consistently being shared amongst more people. So that's why it's exciting to talk about something like this and the innovation your team has put together, because once again, it's like, if you see it, it's common sense that, well, yeah. And if you've put together a process amongst the 55 narratives, now how many have come and gone, or when do you add, which ones, like what needs to happen in order for something to be like, we need to add number 56?
Look, with these type of products, these systematic products that, there's not discretionary. It's not that I come in and can change it with my views.
Yeah.
Automatic. The narratives and everything is constant. So that's why we chose narrative. It's a large set, not huge. Just to give you an idea, we track more than 1,000 different narratives in our systems, but we specifically confined it to a small set of these macroeconomic evergreen narratives that at any point of time, you see some of them are playing a role. So we actually checked that, and at least every narrative of these, each narrative of these 55 played a role at least once in our sample period. Many of them more. But the thing is, you can look at these narratives, and it's available online and all that. And there's a few categories, groups of narratives. And you can see within each group, you can see that rotation. You can see, like when you're talking about markets, like risk or uncertainty or volatility, you can see those changing within the kind of the markets category. And then when you look at geopolitical stuff, you can see, so they're all contributing in different times, because we always pick the top 5 or 10, like top narratives of the 55 in a given time. But there's a rotation that happens from year to year, from month to month, but it's slow moving. But certainly over a time period of 3 years, you can see, okay, some narratives at the beginning of the sample and completely different narratives at the end of the sample.
So, based off your studies, and, I think it's well over a decade y'all been doing it. So therefore, like, what headlines are the ones that cause more narrative driven motion?
It's a great question. What we found, you see narratives come in and out all the time. Of the sources that we find, we actually have all the sources contribute, because we really want to understand what are everyone talking about. If it's just one source, prominent as it may be, it's not going to tell me really if everyone else is really looking at it. Okay. So the power of aggregation gets us much better signal, if you will. So because you can really tap into so many sources, we're talking about more than 150,000 sources that we tap into. And I mentioned 1 million articles, digital media articles every day. You really get a good, well-diversified kind of signal of where it's the state of the economy. So we're not really looking at particular sources, although it is true that some sources contribute more than other sources, but we're not really in the business of understanding which source is the right one. And that's actually leads to another very good question, is that we're not trying to have the media tell us what's right.
Correct. Right.
It's not, we're saying, well, if the trade war is right or wrong. What we're trying to understand is what is. It's not what's right. It's what is. What are people talking about? Even if there's false information, if it moves the market, I want to know about it. So we're trying to quantify what moves the market, irrespective of whether the market has it right or wrong. We just want to be there very quickly, understanding what's going to drive the market. If narratives switch very quickly, we're probably going to miss that, because this strategy can't trade, even though it's rebalances every month. We can't trade over signals that are just happening over like one day or even just a few weeks, because you're going to get so much turnover, and the cost of trading is going to probably, impact significantly their performance. So we're looking at these longer run kind of narratives, and to the extent that these longer run narratives are functioning in the kind of the 6 to 12 month horizon, we're going to capture that. If there's going to be narratives that are going to go switch really up and down very quickly, we're going to miss those.
And what do you think for advisors right now? What headlines or news cycles should they be looking at?
Look, I can tell you, for example, let's say if you look at the month of March, and I have in front of me the kind of the portfolio, the narrative portfolio attribution of our strategy. Like, what was our strategy? How did the strategy, make money, or where did it lose money? So I'm just looking at it. And for example, what the strategy was loading on was narratives of, let's say, risk and uncertainty, international conflicts, commodity investing. These are kind of the top 3. Corporate capex. And corporate capex is really a way to, in this case, it's really capturing some of the AI firms. Okay. So these narratives, the portfolio was sensitive, was positive exposed to those, and they performed well. It lost on, for example, inflation, the inflation narrative. That was a little bit unexpected. And so that it lost on that narrative. So there's positives and negatives, but on average, it did well because it was well positioned into this kind of narratives of the four narratives that I mentioned earlier. But for advisors, I think the point is, it really think about, okay, you go talk to your client and you don't really have a good answer when the client asks you, well, why did it perform well?
Because they're getting the same information you are, right?
That's the point, that now the advisor can say, hey, the portfolio did well because, you heard about that, military escalation is happening. Well, the assets that were in the portfolio were positively sensitive to that because we were tracking that narrative. And that's why your portfolio made money. That's a very different conversation than, okay, well, I put it in something, who knows? The advisor says it's going to work on average over time, but there's no really understanding of why it's working in any given point. And so this tool, or it's like a mindset, it's a new paradigm of just looking at the same data in a different way, understanding what is the narrative exposure of the portfolio to the different narratives that are out there.
Best-in-class service equals more FIA efficiency and greater profitability. Are you frustrated with the antiquated service approach of most insurance companies? You leverage today's modern technology. Why shouldn't your insurance partners do the same? Aspida is a technology company that specializes in insurance, specifically fixed index annuities. They issue policies quickly, seeing some issued as fast as 5 seconds. True story. Provide robust data and reporting capabilities for you and your clients, and maintain a singular focus of making business simple and efficient for you. They also announced their recent ability to gain exposure to the reliability of U.S. equity, along with the growth potential of the world's most recognized cryptocurrency, Bitcoin, through the BlackRock U.S. Equity Bitcoin Balance Risk Index. If you're looking for a more efficient approach to your annuity business and a tech-forward index option with no risk inside of the Synergy Choice FIA series, check out Aspida today. So what are the main narratives that have been driving the growth? Like literally, so for those that can go, and it's so MKT, once again, it's MKT MediaStats, right? They go to the website. I was looking at the performance, literally the last 5 years. So it has more than doubled, and I'm not saying it's going to do that all the time, but the reason I bring that up is because, okay, what happened? Like, is it just because we have more of mockingbirds of journalists saying the same thing, so therefore it pushes, or like what narratives drove that?
It's a great question. It's not just like the number of journalists. The thing is, the strategy, what it does, it tracks, it quantifies first the narratives from that set, and then it tracks which are the narratives that are being discussed. So it tracked, think about what it tracked in the last just 5 years. It tracked the pandemic.
Mm-hmm.
It tracked the inflation. It tracked the trade war. It tracked AI through the CapEx. And now it tracked the military escalation. So these narratives, again, that are moving around, it's not that it's just happened to outperform when these narratives happen. It is designed to pick the assets that will outperform when these narratives show up. So, and it rotates into the narratives that are kind of slow moving. So all the narratives that I mentioned were kind of slow moving in the sense that it wasn't just discussed 1 month and went away, right? Inflation wasn't discussed just 1 month and went away. Inflation part of the portfolio was really working well because it was something that was going, it's a narrative that has been growing for a few years. And so that performed really well. Military escalation, again, there was discussion, military escalation a long time. The trade war was something that happened very, very quickly. So back in May, actually it was neutral to that. But more recently, it actually picked up because people now understand that the narrative trade war is something that's going to happen like all the time. It didn't just go away after those 3 months, starting in April of 2025. So that's that's when the strategy should work well for these kind of narratives.
It's interesting because, I mean, based off your data, what you could probably do, I mean, just like as a side hustle, I guess, but you could almost rate journals and news outlets of accuracy.
Yes, we could. We
Right?
haven't done it.
Yeah.
Yes, but it's possible, but we haven't.
Because you don't want it, because you want it more of just like what happens when this happens, right?
Yes.
That's why.
Your exercise would work really well if we were high frequency trading, because then you want to know who's the first one to come up with the article, and you want to know if the source is correct or incorrect on average. But that's not this program, right? That's not what we're doing here. It's a different approach. And some people do that. Normally they're high frequency traders that are starting to look at this kind of second to second or, microsecond, intervals. That's not what we're doing. We're trying to bring this to help a huge crowd. I mean, huge market of, people that are looking at investment over kind of longer periods. And I really think this could really help people manage their retirement, but also it's something that is tangible. It's not like, okay, you don't know what you're invested in.
Mm-hmm.
You're invested in the narrative of the hour. That's what you're doing on average. If the narratives are too quick or too slow, it's probably going to miss it. But if the narratives are in the intervals that it's designed to capture, and on average, it seems that that's what's happening, then it will outperform well. And it's uncorrelated with a lot of the other stuff you have in your portfolio. I mean, diversification is key. It's trying to track something different, these narratives that we think this is a true or a significant part of the market is moving by that, but it's also long short. So if you have a significant part of your wealth in long only type strategies, which means that you're invested in like an S&P or an Nasdaq, whatever, like these long only, this one is the long short. So you're always neutral to the long only index, but you're getting an extra kick from the outperformance.
So it seems like from your view and how you view things, the organization, it seems, so long-term investing, right? So what brought you into the world now? So like, for instance, the MKT MediaStats is inside of an insurance product, downside protection, long-term investing. So like, how did you get to the thought of, you know what, this would be good in this type of vehicle? So like, why that vehicle? And then what's your thoughts on like what fixed index annuities are in general?
Yeah, I mean, look, this is a very special vehicle, and I got to give a lot of credit to Annexus and Tom Haynes. It came I've known him for 8 years maybe, and like pre-COVID certainly, and he's known about our ideas and solutions, and he kind of challenged us. Hey, maybe we should think about doing something for that market. And I thought, that could be actually really cool.
Mm-hmm.
A lot of nuances, but also a lot of, to service this market, it has to be a strategy that's long-term, low transactions cost, etc. And it took us some time to really design something that will work for that kind of a horizon of investment. But I think the nice thing is that it's just so differentiated that whatever is out there, that it really gives people something, unique, and it uses this edge of technology and understanding markets and connecting to what you read out there every morning when you open the paper, or okay, sorry, I still open the paper, but when you read the news online, etc. It really, I think, gives you an additional instrument that you can use. And I think it's a great product. I'm not saying you should put 100%, and this show is not, we can't give investment advice, but I do think that it is something very different, and I think the market is going to pick up. I can tell you that outside of this market, there's a whole institutional market that we're servicing that is really excited about this. And when you think about thematic investing in general, it's a market that is significantly kind of exploded in terms of assets that are tied to thematic investment over the last 5 years. And so our company is really helping people who want to do thematic investing by tracking what are the themes that are now popular.
Mm-hmm.
And so there's a whole part of us that is helping institutional clients that are working in different time horizon, and it's a whole different market and equilibrium there. But it's the same idea of attention to narrative, driving investment performance.
Yeah, and it's like what your team has created, and I know a lot of my advisors, the top ones we work with, I mean, they love alts. I mean, and the fact that they want to offer things to their customers that are unique. And when you look at like a fixed index annuity, and a lot of them describe it as an alt with downside protection. So it's like you combine that world with this type of, it's like you can see it, you visualize it. It's beautifully how you said it earlier, how you just create it into like a security of almost, you bottle it together in a way that customers can actually be able to perform with narratives as they're being driven. And so it's pretty cool watching.
I also think, by the way, that normally when you look at how the industry has evolved, a lot of things that happen in the institutional side, it takes them a lot of time to get to the retail side. And this is really unique because the retail clients are not kind of left behind. They're getting really technology that is right now used in, for institutional clients. So it really gives them, okay, it's not like you're going to get it in 10 years. You get access to advanced technology being used on the street right now.
And probably my last question to you would be, so where are we going this year? So I know it's long term, but what are some of the media narratives that are bubbling up right now for people to be looking at?
I think these are the narratives that I just mentioned to you before. This is what we're seeing. And so this could change, of course, all the time. But again, the risk uncertainty, conflicts, commods, kind of the CapEx AI stuff. I think that's going to, this is going to be there for a while. Inflation now is kind of kicking in terms of discussion. But again, these things could change, in a quarter, it can change, but no worries, because we're tracking them systematically. And if these narratives change and there's going to be new ones coming in, the portfolio is automatically going to rebalance accordingly. That's the whole point of this. That's the whole point. It is hard to predict which narratives will persist. On average, narratives are being discussed for the last 6 to 12 months. There's some persistence in them, but it doesn't mean it's going to persist for another year. So when these rotations happen, we're instantaneously, we're picking this up in our system, and the portfolio is rebalanced every month. To the extent that there's new things, it's going to rebalance accordingly. And so your clients, the clients are listening. This is what's going to happen. When you start reading things that are outside of the narrative that I mentioned, when you read about it enough and it's going to start bubbling up, it's going to be in the portfolio.
Yeah, you built a great system where you take the human component, the human emotion is out of it, and it's just driven based off of just the facts of where narratives are going.
Let me just mention one thing about emotion, because we didn't talk about the sentiment, whether there's the articles are positive or negative to the topics. And I'll just a couple things say about that. One is when you talk about media coverage, the listeners immediately can say, wait a minute, this journal, it's always negative. Or, that blog post, journalists, they're always positive. Press releases of companies, they're always positive. So there's always, when you talk about media, immediately the word bias comes up. And people talk about, well, is the media biased? So I want to say that we spend so much time de-biasing the data. If there's a source that we identified, that we kind of look at the kind of over the last 3 months at any given point, if you look at a 3 months kind of rolling window, we look at the overall tendency of a source to be positive or negative, and we correct for that for every article. So we debias, as you said before, you kind of alluded to that. We try to debias the data and get something that we, with historical information, we're able to look at each source and understand the overall tendency and correct for that. But overall, what's important is not whether it's being talked about or positively or negatively. It's really what's being discussed. It's not about whether trade war is good or bad. It's about, are people talking about trade war? Okay, it's going to be in the portfolio.
That's awesome. It's incredible stuff. I'm looking forward to continuing to see. I know a lot of the advisors are very excited. I know already they love what they just heard. So appreciate you taking some time. And as we wrap up, any final thoughts or comments before we end here?
Look, I really appreciate the opportunity. I think it's a great, I'm super excited about it. It's based on research. I've been working on it for so long, and I definitely see this need in the market because I think it's something very different. And so we're all in this, and I hope. Look, at the end, I hope it's gonna help people.
Yep.
I mean, that's really what we're trying to help. Everyone. I do think this is really important. So anyway, I really appreciate the opportunity to talk to you about this, and I think it's I'm very passionate about research and financial markets in general, and I appreciate the opportunity to share it with your listeners.
Pretty sure the audience knows that by now, but yeah, no, appreciate your time, Ronnie. Thank you also to the listener for your time and tuning in to the Advisor Mentorship Podcast. Make sure to subscribe on your favorite listening device and subscribe to our YouTube channel at Jeremy Hauser Amp. And as you share this episode with a friend or a colleague or member in a world full of betas, be it now.